Nice to
What's
hear.
the world looking like? It's just utter chaos, but it seems like there's some stability for equity markets.
Yeah, I think, in the last 15 years, I can't think of many times where there hasn't been chaos in the global markets. But for the markets to do well, typically it needs three things. One is it needs free-flowing credit. Second is you need a strong earnings outlook. And the third is you need cheap valuations. And if you look at the story in India 12 months ago, all three were yellow or even red. But today, over the last 12 months, you've seen, with the Reserve Bank increasing liquidity into the system, with rates getting cut, we do have a liquidity that's flowing back into the credit markets. The earnings outlook, which started moderating over the last 12 months, has started to bottom. You're seeing that in the GDP numbers, and I think, therefore, with a lag, you'll start also seeing that in earnings rebounding. Valuations still remain high. They don't remain cheap.
Yeah.
But within that, again, if you look at what's happening in the larger names and the nifty kind of names, those names look very reasonable. Whereas if you look at the mid cap or the small caps, they still look high. So I think we're 2.5 out of 3 in terms of what it takes to have a sustained market which is quite resilient. And so therefore, I think that the equity markets outlook is constructive, barring geopolitical risk, which is something that we live with now, every day of the year.
Yeah.
And those are inherently unpredictable. The global markets have made a bet that geopolitical conflicts are going to be regional and not global. And as long as that remains the case, I think the markets are going to be okay. But that's obviously inherently unpredictable.
But tariffs would be, and we've definitely seen that, get priced in the markets for sure, I guess, beginning March, and then, in the run up to April. Since then, markets have rebounded. S&P 500 already at an all-time peak, and many other global markets as well. We are also pretty much close to that. But is that baked into the prices?
I think the tariffs has created more uncertainty in terms of what those levels actually will be than the reality of what the impact's going to happen. And I think if you look at it in the context of India, exports as a percent of GDP is still fairly low.
Yeah.
And most of that is still services. So in the context of goods, while it's still important to several industries and it needs to be resolved, I think at the GDP level, at the economic level for India, it should not be that material an impact. However, the thing to keep in mind is, of course, consequences of consequences, right? The second degree impacts of everything. And so those are going to be determined by where these rates actually end up, because obviously they've been all over the map in the last 6 months.
Okay, and Shiv, you spoke about how earnings need to solidify a little bit more for the fundas of India to be a little more solid. Now this quarter, the quarter gone by, quarter 4, we were already headed in muted expectations, which is why the numbers were looking fairly okay. But going ahead in the quarters to come, we are going to have the base effect from last year kick in. So do you believe fundamentally we are going to be doing well, or the numbers only going to look good because there was a weak base?
Well, I think if you rewind the clock a little bit, we had a huge bounce back in earnings post-COVID. And you had 20% plus earnings growth for the index because COVID was depressed. Thereafter, the comps became a little hard when you entered the last 18 odd months. And so you saw muted earnings growth, in the single digits. I think when you look at the next 12 months, one, of course, as you mentioned correctly, there is a base effect that will be favorable. But second is the other pockets that are starting to now pick up. One, of course, as I said, is credit is starting to flow more freely in the economy. You're seeing rural consumption that's starting to pick up. Government capex, which was pretty subdued, looks like it's starting to move a little higher. And the two real areas which still haven't seen anything improve yet is urban consumption, which is still fairly muted. And the second is private capex. Company capex numbers still haven't picked up. But I think when you put all the pieces together, I still think it's 2.5 out of 3 or 3 out of 4 in terms of where we are. So definitely a better position than last year.
You talked about as to how there's valuation comfort still when it comes to large caps.
Yeah.
Where do you see those stories play out, and where is it that you're finding those outsized opportunities?
Well, I think still there are areas like, for example, private sector financial, especially the large cap names, seem to be fairly reasonably priced at the moment. And then again, I think if you look at some of the other sectors, valuations are always in context of what their durability and quality of the growth is going to be. So it's magnitude, durability, and quality. And so if you factor some of that in, there are a few other areas, even in consumer discretionary, in healthcare, especially in some of the hospital names that I still think have a very long runway of growth, where I see opportunity.
But Shiv, also talk about the fund flow that we are seeing, because of late the FIs are seen to be making a bit of a comeback in the Indian markets, and we did talk about the global uncertainty that still persists. Do you believe can India be that oasis amongst all the emerging markets and the developed economies which are on the stock market front? They're already at an all-time high, and while Indian macros are now turning favorable, there's a case where the fund flow can now turn positive?
It is. I think one of the things that FIs have seen is that a lot of the money comes from the US. And if you look at the S&P 500 over the last 5, 10, 15, 20 years, it's delivered dollar returns comparable or even better than what the Indian equity markets have delivered in dollar terms. And then, of course, you have added impediments here in terms of taxes and things like that, that maybe some of those institutions don't have to deal with. So if you factor that in, it's dependent on two parts. One is, of course, how well India does, but the second is how well India does relative to the S&P 500, to the US.
Okay, and Shiv, other than large private banks, is there anywhere else where you're seeing some hope of positivity? You've been upbeat on healthcare for quite some time now. Any views on that?
I think within healthcare, one of the areas that we've been very optimistic on is in hospitals. But then again, it's an area to be very careful about, because hospitals are actually a very difficult business. But if done correctly, are one of the best businesses you could own. And there are some operators here who are able to deliver quality healthcare, attract the right kind of patients, attract the right kind of doctors, understand the capital allocation process very well, and therefore deliver very high return on capital. And healthcare is underpenetrated in India. So if you're able to build that trust with consumers, the runway for growth is very long.
Go ahead.
Michelle, I just wanted to touch upon the consumption space, because India has been one of those biggest consumption stories, and of late we have seen government also taking some steps with respect to RBI cuts, tax cuts as well. Do you believe that there are good opportunities to still play this particular sector, or the valuation comfort is still there?
Well, consumption is very broad in India. So you could have something like FMCG that could be pretty highly penetrated and very competitive as well. And you could have certain areas like retail where the runway for growth is very long. So within the broad theme of consumption, the Indian markets are very underpenetrated, but we have to be very selective in terms of where you look in that story as I see it. One thing that we've clearly seen over the last 12 months is the tightening of lending, unsecured personal lending. And that was done correctly, because there was a lot of issues happening out there. But I think as that outlook changes, you're going to see consumption also get a tailwind.
But Shiv, when you talk retail, while that may be as basic as buying a particular thing, the format of how you buy is where the sizable opportunity is. Everything from quick commerce to traditional retail, and unfortunate as it may be, the listed pool is very, very limited, right? So where is it within retail that you find those opportunities, and you think there is that longer runway?
So again, one of the things that we've looked at in India is that typically if a business is very difficult, it's a double-edged sword, because it means that it's hard to make money, but it also means it's harder for other people to enter. And if you look at retailing, if you look at fashion retailing, these are businesses that are very difficult to do. But you do have success stories. I mean, one of the largest wealth creators globally are basically owners of retail chains, whether it's online or offline. And so in India, if you have a company that's been working on that for a number of years, is obviously doing really well, and it's still in only a few hundred cities, but a lot more expansion that can happen, that's where the opportunity lies. As long as they can keep up with trends, as long as they can keep up with just in supply, as long as they do a whole bunch of execution things really well.
Okay, Shiv, do you believe the premiumization wave that we've seen across consumption, do you believe that that play is still very much present in the market? Because if you talk about the entire consumption space, compared to FMCG, pure play, consumption discretionary, that has done much better. Would you be placing your bets in that segment?
I think the premiumization wave has a long way to go. And it's both good and bad, right? The good is, of course, it creates opportunities in different sectors within consumer discretionary. The bad is the consumer base is not broadening out as well as we'd like for that to happen in India. So, you're seeing more wealth getting concentrated. And therefore, that's creating opportunities, especially in leisure and travel and services. But in other areas where there are a lot of different companies out there, it'd be great to see the consumer base broaden out a lot more.
But again, Shiv, this consumer discretionary is a big basket which is playing. So any select or any sub-segment that is your preferred bet right now, be it autos, be it the retail that we just touched upon?
I would say in retail, there's a couple of plays that are really interesting. I think areas like autos, etc., are not something that we've looked at very closely. Tend to be very competitive.
Oh yeah, that's indeed. But Shiv, give us some sense that where is the next big cue for the markets can come from, because we are amidst that global uncertainty, the tariff. Some experts do believe that the worst is rather behind, and now the negotiations in and on will take place. And yes, of course, the earnings season is also through. So where is the next big cue can be lying for the markets?
I think interestingly in markets in India, the cue ends up being earnings coming through, and the markets tend to react to it. And so if, like I said earlier, if 2.5 of the 3 are in place, you're in a good position for the markets to respond. And based on some of the areas where we're talking about, which is increased credit availability, rural pickup, government, capex spend, you could see a pickup in earnings with a favorable base effect, and all of that could then therefore mean a positive outcome for the market.
I just want to get back to the point that you were making on financials, because traditionally you thought financials, private banks, or maybe a few more larger PSBs as well, but now you've got that regulatory backing. You've got the central bank making the moves, which only makes financials extremely attractive, and the larger pool, right? Everything from even insurance plays, etc., put in over there, and of course NBFCs. Is it time to look at bottom-up stories there, or still stick by with the leaders?
In financials, one of the things we've observed is scale matters, and therefore the big tend to be able to withstand uncertainties much better than the smaller balance sheets. The second thing is technology matters, and they're able to invest and upgrade much better than some of the smaller names. And so in financials, you do see accidents happen, and that's part of it globally. And so as long as you don't let that happen to you, which is not just about lending, it's about culture, it's about a whole lot of different things, then just by the fact that accidents happen to other firms means you get stronger. And so therefore, I think some of these firms are still very well positioned, because India is still an underpenetrated credit market. We haven't reached any level of saturation yet.
So financials, healthcare, consumer discretionary, anything else that you're bullish on or buying?
That'd be enough to do well in the markets.
Okay, good to have you in the studios. Thank you so much for your time today. Just going to take a status check of where the markets have headed. If